Hi, let us now look at material ledger as part of the SAP product costing curriculum. Uh, Material ledger has been existing for a long time now, but the way it has been improvised or its capability has been enhanced in with respect to S4 HANA is phenomenal. Even at the back end, the table structures etc. has changed. This is possible. This became possible primarily because of the HANA database, because it of the speed of HANA database. Let us now look at what Material Ledger has to offer. So, what is a ledger? A ledger is a record of transactions pertaining to a specific financial item category. On the balance sheet, you will be able to see the summary balances of various types of GL accounts. Now, let us say if I want to talk about trade receivables, what is the summary outstanding collections from all my debtors. Okay, if I go to the balance sheet and if I go to the GL account that represents the sundry debtors or what you call the trade receivables, you will get to know the total amount that is still due for collections. But does that provide you the breakup of which customer, as for which invoice, has to pay you what amount? Or does it give you information about how much has the customer already paid, how much has the customer not paid? Does it facilitate you aging analysis as to how long the collections are due? So there are various things which the balance sheet or the general ledger does not provide, because the general ledger is a composition of aggregate balances of all your GL accounts. But now we are looking at which customer owes you how much amount on which invoice, how long it has been. So you need further detailed information. That detailed information is provided by accounts receivable ledger, the AR ledger. Similarly, on the flip side, if you talk about the payables, how much do you owe to your vendors, right? What are your total trade payables will be given by balance sheet as a trade payables account, but how much on which account? I know how much discount have you gained, which invoice has been pending for more than 180 days, which of these invoices are more than 60 days old or 30 days old. All these informations can be inferred or gathered only from the accounts payable ledger. Similarly, we have material ledger. Material ledger talks about the material and the various transactions a material undergoes during its journey within our legal entity. So now we'll talk about, when you buy the raw materials, right? You store it in the warehouse. Now after the raw materials are brought into the warehouse, then you consume it. You issue it against the production. Now at this stage, the production can comprises of 3 or 4 different operations. Probably operation 1 might take just 2 hours, but operation 2 might take more than a day. Then there is an operation 3 and then there is an operation 4. Your goods may be at different stages of production. So how do you know which of these materials are at which stage of production? What worth of materials have completed operation 2? What worth of materials or what quantity of materials has completed operation 3? Or how much of these materials are still in work in progress? What is the price differences or the variances that these material purchases has resulted in? Or what are the production variances, activity related, conversion cost related variances on each of these materials in the process of producing either a semi finished good or a finished good. So various such aspects are stored as part of the material ledger. If you ask me what is the balance in a particular bank account, that is not answered by material ledger. Material ledger confines only with all the gamut of transactions of pertaining to the material alone. That's why it is called material ledger. So now you understood material ledger or the inventory ledger gives you the decomposition of various transactions that has taken place on a specific material, right? Now in S4 HANA, it has been enhanced not only to tell you what is the stock position, but material ledger has been empowered with 3 major objectives. The first objective one is actual costing. Now actual costing is something I have covered earlier. Now the other two are parallel currencies and parallel valuation. So we have something called the preliminary costing, then we have actual costing. Now this is so material ledger enables the actual costing, and it will also help you based on your actual expenses. Based on that, you calculate the actual rate per activity. Then it will help you reevaluate your production orders based on the actual prices. It even helps you determine what are the variances and helps you settle those variances and take those variances to your inventory account for those stock which has been sold, right? Those variances and production variances, price variances, etc., will remain in the P&L against COGS, as well as the production variance splitting. But whereas those variances which of goods which are not yet sold, of goods which are still in work in process, during the month end, right, every month end we run something called an ML run, and material ledger helps you in transferring those from P&L to your balance sheet inventory account to the appropriate accounts, right? Now that is actual costing. Now in this session I am now going to talk about another important aspect. Now many people get confused here, what is this parallel currencies, what is this parallel valuation, etc. So for the purpose of this session I would like to request you to avoid thinking about actual costing, avoid thinking about moving average price, standard price, etc. Let us only think about parallel currencies, parallel valuation. Is that fine? Both are not same, right? Both are not same. This is something you have to very importantly remember. Both are not same. Now let me go to the next one. Multi-ledger, multi-currency. On the top that you see on the column headers with green color here, these are basically FI based currencies. In S4 HANA, SAP has enabled a given transaction to be recorded in up to 10 different currencies. Up to 10 different currencies. Obviously, the currency in which you are entering at the transaction level at the time of posting becomes your document currency. Okay, that is another currency which is not mentioned here, but there is a document currency. That apart, you have 10 different currencies on which you can actually report your numbers. So the legal entity, as legal entity is for the statutory purposes, so you have to report your financial numbers to the stakeholders, to the statutory agencies, to the federal government, etc. So you have something called company code currencies, which is mandatory. Company code currency is completely mandatory. Thereapart, you have something called group currency. Now group currency, now give me 1 second, let me bring the pointer. There's a pointer. Okay. Group currency is something you establish at the client level. So it is configured at the client level. So under that particular client, right, any number of legal entities you can have, all of those legal entities will inherit that particular group currency, and group currency is denoted by a 2-digit numerical number 30, right? Apart from that, you have the ability to use 8 different user defined currencies. I may choose that my third currency, freely definable currency, is hard currency, right? Now these are country specific. Index based currencies. This hard currency and index currency is something which is assigned at a country level and using the transaction OY01. Let me just check if I can show that to you in OY01 for country code India. Okay, now I go here OY01 and I select my country IN. I go to the country IN and you can see here the index based currency is GBP, hard currency is Euro. So we can set here what is the index based currencies and Euro, and we can make use of it. This is based on country. I was working for one of the legal entities in Africa. I'm not sure whether it is Mozambique or Nigeria or one of them. The currency had a huge deflation, and then they had to report all their numbers using a RSA, the Republican of South African currency. So they use RSA as the hard currency and reported all their numbers using RSA. This is one way of reporting the same given number using multiple currencies. Now the other one is SEC4. There is a transaction code SEC4. This is the group currency. We are in client 100. The 100 client, if you look at 100 client, the group currency that is configured is USD. So if you have another client, In that client, you can have another currency, but for now we are making use of 100. For that 100, we have this currency set as USD. Very very important. Every legal entity will created in this client will have USD as the group currency. Whether you wanted to report your number using group currency or not, that's a choice. That's a choice. But what is configured at group level remains same. You cannot change that because it is applicable to all legal entities. Now we shall go back. So now we have understood we have 10 different currencies with respect to FI. Now where are these numbers stored? Let us say I have 10,000 worth of sale that is happening. 10,000 worth of sale that has happened in company code currency. The same number gets reported as my group currency is USD, which I have shown you using the SEC4. Then my hard currency, let's say it's euro, it is 110 euros. Then user defined currencies was GBP, but let's say in this example here I have used a Canadian dollars, it comes to 164. You want to report your number to your Middle East corporate also, so you may want to use AED. Your user defined global currency could be again USD, so you can report your numbers again using a global company currency, which is represented by the number 60. All of these numbers are maintained in the ACDOCA table. Now where do you do this configuration? You do this configuration in Finessi underscore ledger. You define the FI currencies, map them to the ledger, which are in turn mapped to the company code. I will repeat this statement. In Finessi ledger, you define the FI currencies. See, I have defined what 1 is mandatory. So 1, 2, 3, 4, 5, 6. 6 currencies I have defined. So it's your choice, your number. In how many different currencies you want to report is your business decision, but you do the configuration in Finessi ledger. Now these currencies are mapped against a given ledger, and that ledger can be used by the legal entity. Now both are possible. The same legal ledger can be mapped to multiple company codes, right? And a single legal entity can have multiple ledger. Both, it is an M is to N relationship, but for the purpose of our discussion of material ledger, we are not deep diving into that one because that will unnecessarily cause a confusion at this juncture, right? Now coming to material ledger is maintained in MATDoc. SAP as on today, they have maintained, given us the provision of having maximum 3 different currencies. So I can choose out of these. Obviously company code currency would be mandatory. Then I can have group currency. Then I can choose hard currency. So I can say I want hard currency, group currency, as well as company code currency. Now this information is maintained in MATDoc, right? And you configure this in OMX2. Now I'll go to the SAP and show you how to configure Finessi ledger. But I'm not going to do that. I'm just going to show you some of the records there, and then we can see how it is done. So I go back to the transaction code /n Finessi underscore ledger. There is a path also in financial accounting. You can go under ledgers and see this one, but I am directly using the transaction code. In subsequent classes, I'll be showing it to you. What are the different types of currencies available to you is defined here. Please understand, Finessi ledger is a bit complicated structure. The way they have designed it, it is confusing also. So Finessi ledger, you define the currency types. What all currency types are available for you in this particular SAP box, right? Now, out of those currency types, which one are managed globally, and which of those currencies you are going to manage at company code level. Now, for example, you can see this A002 company code, K100 company code. You have, it's in group currency as well as group valuation as well as profit center. There are 3 different currencies for this. It's your choice what you wanted to do, right? This is maintained at group currency. Now currency definition, again I am talking about it. It has 2 steps. You can see it. Let's say the first step is you choose what all currencies you want to have in your SAP box, which is done in the first step. Fair enough. Then you have a tree structure there, 2A, 2B. 2A says you set the conversion ratios and the valuations for which the currency types will be used, right? Either globally or you can do that locally. So here you see I am having this currency 11. The 11 is translated from the document currency. Whatever the document currency is there, it will be converted, and these settings is at global level, not at legal entity level, and it will use M, which is the standard average rate, and it will make use of the translation date, and based on that, whatever is the FX rate which you maintain in OBP 8, it will pick up the rate and convert it into the company code currency. Again, the next one 2B, the part 2B is where the currency conversion settings are managed at each legal entity level. For each legal entity level also you can do that. For example, you can see AA02 has group currency as well as group valuation as well as profit center valuation. So this particular currency, again, the source is not document currency, it is going to pick up company code currency. Now I can make a purchase from Japanese yen, which is my document currency, but my legal entity happens to be in India, so my legal entity currency is INR. So when I do the group currency, which is in USD, this group currency gets converted from the company code currency rather than the document currency. And these are again based on what rates, those are average rate, etc., bank selling rate, bank purchase rate, on which rate you wanted to convert it, and then based on what date you wanted to convert it. Okay, when we configure, as part of the configurations, I will again show it to you. Now we spoke about where does it fit with your ledger, right? Where does it fit with your ledger? Now this is the important part. Now look at it. Again, I have seen this unnecessarily people go and create too many ledgers, which should be avoided. I mean, we should not make too much of clutter. But if you see 0L is the leading ledger, right? To the 0L leading ledger, if you select the ledger, first you need to select the ledger and go to the company code specific settings. Okay, you can have only one leading ledger. That's why this is marked as leading ledger. You cannot change it also, right? 0L is always the leading ledger. Now, company code settings. Go to company code settings. I'll pick up something that has got multiple currencies. Let me see if somebody has defined. Yeah, I can see here somebody has defined AA02. Now AA02 company code, right? Local currency type 10, global currency type 30. So the same number is reported in almost 1, 2, 3, 4, 5, 6, almost 6 different currencies. This is reported. If you want, you can have one more currency as well. It's your choice. So it's completely your choice. Okay. Now that is the company code setting. Now if you come towards the right side, if you scroll towards the right side, okay. I think I scroll too much. Okay. The last 3 currencies represents your material ledger. The last 3 currencies represents your material ledger. Whatever are the material ledger currencies that you choose, in the PPT there was an orange box, right? So you define it here, as well as this should match with what you define in material ledger in transaction OMX2. In OMX2, whatever you define, that is something you can again mark it. You need to mark it here. Fair enough? So now this is the financial ledger. If you go to AgDoka, you will find the same thing. Now let me go to OMX2, or else I'll show through the path also. SIMG, go to controlling. Now we are talking about material ledger currencies. Material ledger currency, product cost controlling, actual costing, this OMX2. Let me show you the T code as well. If you go to additional information, display key, IMG activity. OMX2. So click here. Okay. Now somebody has defined AAA02. No, they might have chosen my K100 profile. Maybe, I don't know. You can see here. Here we have selected 10. Then group currency. Again group currency, but with a profit center valuation. Now I am going to cover valuation. At this point of time, think that these are 3 different currencies. Okay, 10, 20, 30 or whatever you want. If there is anything else which has multiple currencies, let me just check if somebody has used more than one currency. Now in this box I do not see more than one currency. Yeah, here somebody has used a 10, 20, 30, 3 different currencies: company code currency, controlling area currency, as well as group currency. There are 3 different currencies in this particular material ledger type. Fair enough? Now what is the result? The result is, if you go to MM02, Okay, if you go to MM02, pick up a material, okay, enter it, go to accounting one view, select a plant, okay. Can you see here? Not only company code currency, it also gives you group currency and another group currency. Now I need to find a material for which LGS is mapped, but at this point of time I am not doing that. But you can see that the same material in material ledger gets valuated in three different types of currencies. Now if you would have chosen hard currency, you will get hard currency here. If you will choose some other currency, index currency, you would get index currency. So it is your choice as to which currency you wanted to choose, right? Let's now go back to the PowerPoint. So we have understood in FI you have 10 different currencies. In material ledger you have 3 different currencies. This is configured in OMX2. This is configured in Finesty ledger. Now to this material ledger you will map a valuation area, and to that valuation area you map plants, because your material is always created in reference to a plant. Because to the plant we have assigned this valuation area, and that valuation area definitely is mapped to a valuation profile. That profile picks up these three currencies. So remember, your material is mapped to a plant. That plant is your valuation area. That valuation area is will be mapped to a valuation profile. In OMX3 you do that, OMX1 I believe it is in OMX1 you do that, and that valuation profile is what I have shown you in OMX2. There were three different currencies. LG Electronics or somebody has mapped 10, 20, 30, right? 10 is your company code currency, 20 is your controlling area currency, see here, 20 is your controlling area currency, 30 is your group currency. The group currency is maintained in the at the client level, right? And index currency and hard currency I have already shown you through transaction OY01. I also know the path, but we don't need that, but using both of that we can check it. Now let us look at the next concept. Try to understand it without complicating yourselves, right? Multi-valuation. First we will talk about the legal valuation. Okay, what is legal valuation? Let's break it into two words. Valuation. Valuation means to ascertaining the cost of your material. Now we bought raw materials, we make it finished goods. In the process it starts appreciating lot of costs, namely the conversion cost, overhead cost, etc. And then you come to a particular cost, and then that is the valuation of the material, right? Finished good. Fair enough. Now even the raw material has its own price. It will also appreciate the inward freight cost, the insurance cost and handling costs, etc. Whatever you appreciate it, it will take it. That is the valuation of a material. Similarly you will have valuation for every type of material. Now what is legal? The word legal should strike in your mind two sets of words. One is shareholders, one is the government regulation authorities. So you will have to report your numbers. So what is the valuation price that I am going to show to the government as well as shareholders of my material ledger, right? Now government will not be interested of course in your material ledger, which material, etc. But for the understanding the multi-valuation, we have one set of valuation which is legal valuation, which I will show it to you. Okay. So I have on the left side description, opening stock, purchases, quantity sold, closing stock. Fair enough. Then here the bottom section represents the value and the top sections represents the quantity. Fair enough. So in legal entity A, my opening stock is 0. I purchased or I produced 10. So because there is a conversion, I would say I produced 10 and I sold 10 units. So my closing stock becomes 0, right? Now I bought raw materials, etc., packing materials, etc., for 100. Then I added a conversion cost of 40. So my cost of goods manufactured, which in SAP terms is also COGS, is your 140. 100 plus 40 is 140, right? Now I am going to sell this to legal entity B. Both these legal entity A and legal entity B are part of the same group. Let's say I have two different legal entities and I am going to sell from legal entity A to legal entity B, right? So I add a markup of 20. So 140 plus 160, and so my profit on 10 units is 200. Remember, this is 200 on, this is the profit. Now the government authorities, they will come and tax you on this 200. Think that this 200 is 200 million or whatever it is, 200,000 or whatever you want to take it. They are going to tax you on this particular part of 200, right? Now look at the scenario. You sold to legal entity B. Legal entity B purchased, right, 10 units, right? Legal entity A sold to legal entity B 10 means they purchased 10, and then they sold 5 units to end customer, external sales or secondary sales, we say that. So your stock remaining is 5 units. Fair enough? 5 units is what is remaining. Then at what cost did they purchase from legal entity A? 160, right? Now they apply some packing, etc., and certain overheads, so which is coming to 20, and then the COGS comes to 180, and they sell it to at 250. So what is the margin they have made? 250 minus 180, which is 70. Now how many units have they sold? They have sold 5 units. So if they have sold 5 units, what is the profit? 350. Yeah, 350 is the profit. Now from a group perspective, what is the profit? From a group perspective, what is the profit? Now let's look at it. I have this avatar here covering legal entity A, legal entity B, both belong to the same thing. Whatever I have explained you is the narration I have added here. Legal entity A sells to be 10 units with rupees 20 markup and makes a profit of 200, which is here. It's an arm's length transaction, and for external reporting purposes 200 is considered as the profit, right? That is what is considered. LEB, legal entity B, sells to end customer, secondary sales 5 units, okay, and the markup is 70, which is hidden by this avatar here. Maybe I can move it. Unfortunately I am unable to move him. I can move him. Oh, very good. So it becomes 70, and the total margin they made is 350. Now if you add 200 plus 350, which comes to 550, what is the total profit as per legal valuation? So 200 plus 350, 200 plus 350 is 550. You end up paying tax on this 550. Now from a group perspective, have you sold 10 units externally to external customers? No. You have sold only 5 units. The 5 units still is lying in the legal entity B in the stockyard, right? But if you look at it, legal entity A has recognized a profit on 10 units, because for the purpose of statutory, right, you have to report your actual sales. It's an arm's length transaction, and you have to show in your books 200. But from a group perspective, the profit has to be recognized only on those units which are finally sold to customers, which means 20 into 5, which is 100. Let's look at what is the profit. So that is what I have mentioned it here. You can read it yourselves. Now let's what is the total profit as per group? Internally 550 is not my profit. What is my profit? My profit here is I can only recognize 100 as profit of legal entity A, not 200. And 350 is correct because 5 units you made a margin of 70 into 5, this is correct, but 100 only is the profit of legal entity A. 100 plus 350 is equal to 450. 450 is the group profit. This because I have not yet sold 5 units, right? This is the key thing which became very complex because the intercompany eliminations is a very complex item. During the month end, lot of these practitioners end up spending lot of their time solving this one, and that is where SAP has introduced in the material ledger something called parallel valuation. In the previous screen, remember, again I am repeating, in the previous screen we only spoke about, let me show that to you. Can I just go back straight away? No, I have to go one there. Okay. Here we saw the material ledger being reported with 3 different currencies. You can choose any currency, hard currency, index based currency, global company currency, any currency. So one number gets simply converted into the choice of your other 2 currencies. That's all. But now here we are talking about valuation. We are talking about valuation. Okay. Now go to the next screen. I'll explain you how SAP has solved. Yeah. Now look at on the left side, legal entity A, same, it maintains two different ledgers. As part of the material ledger, it maintains two different ledgers. One is for legal valuation purpose, one is for group valuation purpose. Similarly, legal entity B will have legal valuation as well as group valuation. Now, what currency you choose for group valuation is up to you, right? As I said, I have chosen here company code currency, here also company code currency. So, I'll come to that in a further slide. But now look at the numbers. All the stock that I sold, the scenario remains same. Just look at what is happening in the group books. Legal entity books, you have the cost of your materials is 100, conversion cost is 40, cost is 140, revenue is 160, markup is 20. You sold 10 units, so you have a profit of 200. But with respect to group, right, with respect to group, it will 100 is the material cost, then conversion cost is 40, cost is 140. See, now look at it, 140, 140. It is not taking 160 as the cost. Fair enough. In legal entity, 140 is the cost. Now this 140 is what gets reported here. The moment I try to bring this particular pencil, I end up suffering a bit. Let me see if I can make use of the pencil here. Okay. See, this 140 is what is going here. Sorry, Control Z. No, I cannot use that. Sorry, I have a bit of struggle doing this. Let me choose an arrow. This 160 becomes the cost here, right? Control Z, can I clear it? 160 is becoming the cost to legal entity B. But whereas if you look at it in group books, 140 is the cost. That is where all the difference comes in. So now you look at it, SAP Material Ledger has enabled you to evaluate your materials. What is the cost of the same material as per legal entity? 160. What is the cost of same material as per group valuation? It is 140 because it has removed this markup. The markup is the internal markup. And to this 140, it adds the conversion cost. Then your COGS becomes 160. You have sold it for 250. Then your profit is 90. Because you have sold 5 units, 90 into 5 is 450. If you add legal valuation books 200 plus 350, you are correct. As per legal valuation, 350 is perfectly correct. Sorry, 550, 200 plus 350 is correct. But if you look at group valuation, your profit is 450, which otherwise was so Herculean to compute, which has become so simple now. You can report using group valuation, you got your profit 450 in your material. We can actually see this happening in a transaction called CKM3. You can see this wonderfully happening. Right now, material ledger is a boon for all those who end up computing, breaking their midnight oil, to getting these eliminations done. Even in group valuation, group reporting, you can only do as per general ledger, but you cannot do those intercompany eliminations at sub dimensions. So let me not go into that one. Sub dimensions in the sense, if I want to eliminate the profit at brand level, etc., we will not be able to do. Okay, now I will avoid those details not to complicate this particular session. Fair enough. Now, what is the key takeaway from this particular slide, which is mentioned group valuation? The key takeaway is material ledger enables you to valuate your material, right, in your books in two different valuation method. One is legal valuation, one is group valuation. In group valuation, we do not consider the profit or markup that is set between two different legal entities. You can achieve this by the concept of transfer pricing, or you can achieve this by the concept of additive. So there are various techniques, we can make use of it. As of now, for now, I am not going into that one. During our configurations, etc., I will be showing you how to do that. Now the moment I do this, okay, fair enough. I was learning. Okay. Now let me go to the next slide. Okay, let me remove the pointer. Okay, pointer options. There is a pointer. Okay, now I have removed it. Okay, now I have come to the another scenario called the profit center valuation. Now, what is profit center valuation? Very interesting. Okay, this is just the converse of the group valuation. In group valuation, what we did is that the markup set between two legal entities very important from a statutory perspective, from an external reports perspective, but we eliminate that as part of group perspective, because when it comes to group, that is the unsold profit on unsold stock has to be removed of the source legal entity. Now the converse of it, let us say that you want to promote competitiveness. Let's say I have two different plant A, plant B. Right, I have plant A, plant B. So plant A sells some of its semi-finished goods to plant B. But in this process, what plant A says is, see, my profit margins are affected if I am selling to plant B, because I can sell it to the external market also. So at a corporate level, they agree to certain markup, because each line of businesses, the respective org unit says our profit, our margin, our bonuses, our payouts, etc. are dependent on that. We have been working hard. Why should I not charge a markup when I am selling to my sister plant, right? So they will say, from a legal entity perspective, it is not a profit. This is basically a notional profit that you record at the profit. Each plant is represented by a profit center, right? Now what I do is that, because materials are, every material is mapped to a plant as well as a profit center, so that is where the link is established. Fair enough. Every material is mapped to a plant as well as a profit center, so that way plant and profit center combination exists, right? Now what happens here, let me show this to you. Okay, now my material cost is 100, my conversion cost is 40, my COGS is 140, right? Cost of goods sold, or COGM, then you sell it for 140. Now you are not selling these 10 units as per legal valuation, that's why there is no revenue, there is no markup, there is no profit. But whereas plant A is selling to plant B, now plant A is setting a markup of 20. Plant A is setting up a markup of 20. Let me just bring something here. Okay. Right. It is setting up a markup of 20. So you have 20 here. Right. On 10 units, they recognize a profit of 200. They will go to their top management and say, hey, we have made a profit of 200,000 this month, so please give us an extra incentive, because all the workers in my factory in my plant has worked, stretched a lot, so let us reward them. So they have a number today, they know their profit that they have made, and they will say, come on, please give us the additional incentive. I'm just giving you an example now. Look at legal entity B. Legal entity B, when it legal entity B, 140 units, 20 units, 160 units, 250, 90, 450. Then the legal entity B, when they are selling it to the external, let's say the plant B, from plant B we are selling it to the external market. Now the cost is 160 here. Now let me bring this pencil. The cost is 160 here. It's just the converse. But whereas as per the legal books, it is 140. And 140, let's say plant B does the packing, right? They appreciate by 20, then your COGS becomes 160. For the legal entity, if you're 90, then your profit becomes 90 into 5, 450, right? Now the same thing, legal entity B is selling it to the external. Now they make a profit of 70, so totally it is 350. So this 200, why this difference of 200? Because 5 units are not yet sold. If you sell those 5 units also, the profit will accordingly proportionately increase, right? So those set of profit center level eliminations, profit center level valuations are handled using the profit center valuation. Valuation means, what did I tell you? The cost of the material, including all the appreciations that takes place internally, right? Whatever is happening within your legal entity, that also. So as per the legal entity, the value of this material in legal entity B is 140. But whereas as per profit center valuation 160, because you have included a markup of 20. Is that clear? So now I will remove all of these drawings. Okay, then I have to go back to the mouse. So there is a technique. Then no, I have to click the mouse. Do I have to click the mouse? Okay. Yeah. Now I'll go to the next slide. So here you have seen in the books of A, in the books of B. So I hope you have understood. Otherwise, playback this session again. This is very very important to understand. Okay, I brought my avatar. So I have, this is the scenario which I was talking about. Okay, so let's go back. Let's now go to the second one. Mr. Avatar, please go somewhere. Okay, you are looking right side. So okay, so look at it. Material ledger allows you three types of valuation: legal valuation, group valuation, and profit center valuation. So legal valuation is always in company code currency. Group valuation, you have to choose which currency you want, either in group currency. See, legal valuation is always in company code currency. Group valuation is denoted by the number 1. So group valuation you can do as per the company code currency. Group valuation you can do as per controlling area currency. Group valuation you can do as per group currency as also, right? Similarly, profit center valuation can be done using company code currency, controlling area currency, or the group currency. How this number gets denoted? 10, 30, 31. The first digit represents the currency which is coming here. The second digit here represents the valuation. So now if you look at it, 31 means group currency, because 3 stands for group currency and 1 stands for group valuation. So that is why group currency, group valuation. Fair enough. 32 represents group currency and profit center valuation. So this is the entire gamut of what is multi-valuation. This is the gamut of multi-valuation. Sorry, I don't know what I clicked. So let me just click. Okay. So now let me go back and show you. Okay. We today have understood what is material ledger, right? So here myself Rajan here, you can contact me for any technical subject matter doubts. For more details on the training program, you can contact the number and details mentioned here. So we understood what is ledger, then we understood what is material ledger, right? Then we understood what are the FI currencies, then we understood what are the material ledger currencies, right? Where do you do the setting? I have gone into the system and shown you. Then we spoke about what is legal valuation, right? Then we understood the challenge of the profit that is being determined or has to be excluded on unsold stock. Then how material ledger is facilitating by introducing another set of ledger which is called group valuation. Then I showed you in the system also, when you go to the material master, you can have legal valuation based pricing of the same material. Then you have the group valuation based. Then you also have profit center based. Then we understood the group valuation, how the profit is being determined, and the unsold stock profit is by default getting eliminated. So when you do your MIS reporting, right, at the group level, right, you make use of this 450 here, right? Then we understood a scenario about a notional profit between profit centers for goods exchanged between plants, and how those profit is not important for legal entity purposes, but in the books of profit center it becomes important. So that we have understood. Then we have understood how the coding is done between both these things. Now I cover each topic very extensively. I cover each of these topics, so you can look at what all the complex scenarios that I have covered. I'll be covering and I'll be sharing with you. So you can check my YouTube channel and then you can go through that. Thank you very much.